All right, everybody, welcome to Liberty Lens. I'm Big John, and tonight we're asking a dangerous question. Who really controls your money? President Trump has nominated Kevin Warsh to replace Jerome Powell as chair of the Federal Reserve. Right as our federal debt explodes past 100% of our GDP and interest payments race toward $2 trillion a year. At the same time, there's a Department of Justice investigation hanging over Jerome Powell, and critics are warning about the political pressure on interest rates. Is this is this long overdue accountability, or is this the White House trying to steer monetary policy to cut rates and ease the debt burden? When the Fed moves rates, your mortgage, your savings, inflation, even the stock market move along with it. So the real fight here isn't personal. It's about the Federal Reserve's independence, political power, and the future of the U.S. economy. Let's get into it. And thankfully, I happen to have a very smart and trained economist as my co-host to help me make sense of all this stuff. Mike Termott. Mike, how are you doing today?
It's good to be with you. I cannot live up to that. The good news is that even if I were smart, that would be overrated, right? I mean, smarts, as most of your listeners know, smarts is completely useless. But I will plead guilty to being well trained.
There you go.
There's no way to get around that. My traditional training, having 3 advanced degrees in business and economics,
Right.
leaves me no excuse to misunderstand the Fed. When I got my PhD in economics, it was indeed in Washington, D.C. It was from the George Washington University. So I have no excuse not to understand the Fed. I've known a lot of wonderful people over the years who have worked with the Fed. I've worked alongside them closely, both in a regulatory context,
Right.
and in a rules-making context. And I can tell you that notwithstanding how much we are going to trash them today, and how much as libertarians we trash them all the time,
Right.
that is merely institutional. As
Right.
individuals, right, the people who work there are smart and hardworking and patriotic, and they want to do the right thing. It's just that the way that the Fed is built is it has some shortcomings that we're going to explore.
Right. And just let's do like a 30-second to 1-minute primer on why libertarians especially don't like the Fed. I mean, aside with taxation is theft, leave my stuff alone, the third rallying cry for libertarians would be end the Fed, right? As Ron Paul famously said.
That's right. And as liberty-minded Republicans might say, at least end the Fed as we know it, right?
Right. So
reform it so it doesn't behave as badly as it does.
Right. So when we talk, and by the way, this isn't something that necessarily is only libertarian, as you mentioned, like conservative Republicans, anybody who considers themselves fiscal conservatives, and those folks interested in individual liberty have always wanted to get rid of the Fed or at least change the way it operates. So very quickly, give us a 30-second to 1-minute plain English explanation, if you can, Mike, what the Fed is and why we want to get rid of it.
That is an ostensibly private sector organization that was created pursuant to federal legislation, which means that its board is appointed by the President of the United States, but its membership is all private sector banks. And the Fed's job, and the reason it's called the Federal Reserve, is to be a place where commercial banks, private sector banks, can make their deposits. And it acts as a clearinghouse for deposits among these institutions. And that is the way that the Fed controls interest rates in the United States. Is tradition, not now, but traditionally, in order to control interest rates, the Fed would influence the rate at which these banks would lend to each other. And the way that it would do that is to enter that market itself. These are open markets. Thus, the Federal Reserve System's Federal Open Market Committee is the one in charge of setting interest rates. The Fed would go into these markets as a participant and borrow money and lend money at a certain interest rate, and that would affect the interest rate at which banks would lend each other money. And as it turns out, the rate at which banks would loan each other money affected the cost of banks doing business, and that would enormously affect the interest rate at which banks could lend to others.
Meaning
So
consumers.
businesses, whether it's on a credit card or a multi-million-dollar loan to General Motors, right?
Right.
The banks have to take into consideration, of course, the cost of their own borrowing money, whether that's through deposits from consumers or borrowing money from each other or borrowing money by issuing bonds. All these markets, the Fed
Right.
has learned how to participate in and how to affect. And this is how the Fed controls the extent to which banks are able to make money available to the rest of us. And that's how the Fed affects interest rates. And the reason that it does this is because that's where inflation comes from. Inflation comes from too much money, or all right, maybe too much is maybe not the perfect phrase, but more than enough. Inflation comes from there being more than enough money in the system to pay for everything that we need. And so naturally the prices end up increasing. And the mechanism by which that happens is that the Fed lowers interest rates, encouraging everyone to borrow more. All that money that gets borrowed has to get spent on something. Well, most of it has to get spent on
Right.
something. And that increases the demand for goods in our economy. And that drives up the price for all these goods in the economy. And to the extent to which it drives prices up more than what the prices had been earlier, that's the definition of what we call inflation.
Right. And first of all, next time, please wear a tweed jacket and maybe have a corncob pipe or something when you do your professorial thing, which was excellent, by the way. But I just feel I would have a warmer feeling if you did that. But the second
I
thing also,
appreciate that. And by the way, you did not tell me I was going to have to do 90 seconds on the Fed, but
off the top of your head, that's excellent. I get it because it's genetic for us. But let me also add this, that the other part of this is it doesn't just affect U.S. rates. It doesn't affect just the U.S. economy. Because of the dollar standing as a reserve currency, it really, the Fed affects the whole world's economy. Wouldn't
that's
you say?
exactly right.
Yeah.
Well said.
So, okay. So the Fed sits in this weird position, Mike, right? That I think a lot of people sometimes don't understand. It's sort of a hybrid between a federal agency and a private institution, correct?
Yep. Yep. Yeah, that's exactly right. There are 12 people who sit in the Federal Open Market Committee and set interest rates. 7 of those people are presidential appointees to the Federal Reserve Board. And the other 5 are presidents of regional banks. There are a dozen regional Fed banks around the United States in places like San Francisco and Kansas City and Minneapolis and Chicago and Dallas and Philadelphia and New York and Richmond and others that I'm sure I'm forgetting. And these individual regional Fed banks appoint their own presidents. Each one of these regional banks has a president, and 5 of the 12 on a rotating basis sit on the Federal Open Market Committee. So at any given moment, you'll have the 7 governors of the Federal Reserve Board. The president of the Federal Reserve Bank of New York is always on the Open Market Committee because he's the one who has the bank that has to execute on all this. The Federal Reserve Bank of New York is the one that actually engages in the transactions. And then 4 of the other 11 Federal Reserve Bank presidents participate in that. And they're all appointed by their members and by the rest of their board of directors, which is to say a bunch of folks from their community who care about the health of our economy.
So it's very interesting because as you're explaining this to me, I get 2 images that 7 of the 12 are sort of like the Supreme Court. They're appointed by the president. The Senate has to confirm them. And the other 5 are sort of like the conclave of cardinals that elect a new pope, right? So they're all sitting there, and out of the 12 regional banks, you get 5 representatives that get
Yep.
put on.
That does happen a little bit. And to your point, the terms of the Federal Reserve Board governors are 14 years.
Right.
which isn't quite a life sentence, but it's fairly long considering, it's rare that you get a spring chicken on there, right? So 14 years typically defines the rest of your career if you serve out an entire term.
And that's a great point because we see this in our federal government, right? House of Representatives, 2-year terms, senators, 6-year terms, Supreme Court justices, life, right? And I think when you look at that, it's supposed to be a staggered system, right? Like
Yep.
the House is interested in short-term concerns, more responsive theoretically to the people. Senators outlast the president, so they have incentive to do what, quote, is best
Yep.
beyond any single administration. And Supreme Court justices theoretically should be above political reproach. They're
Yep.
there for life. They should be dedicated just to interpreting the Constitution. The
Yep.
Fed governors sit somewhere between a senator and a Supreme Court justice in terms of length.
Yep.
How does that, in your opinion, dictate or sort of indicate how much politics should be involved in the Federal Reserve?
Yeah, well, the idea is that it should be completely apolitical, right? The idea is that the Fed needs to be completely independent of elected policymakers in the federal government or any other part of the government, whether they be senators, the president of the United States, or congresspersons, has to be completely independent. And the reason for that, and the reason for the enormous 14-year term, is that you don't want the Fed to be influenced by people who are trying to get elected soon.
Mhm.
Right? So if you've got a president, a senator, a congressman who cares that the economy looks really good over the next 6 months or a couple of years, oh boy, those folks are going to put pressure, and we see all the time. President Trump didn't invent this. You see presidents all the time pressuring the Federal Reserve Chair and the Federal Reserve Board and the Federal Reserve's Open Market Committee to lower interest rates,
Right.
to get more money into the economy, to juice the economy, to get the economy rolling, to lower the unemployment rate, to get investment up, to get consumption up, so that everyone's having a good time, and disregard the extent to which inflation is coming right around the corner, which is going to disrupt the economy. It's going to slow everything down, makes the economy not work very well. It cheats people out of the value of their assets. There's all kinds of reasons why we hate inflation.
It's
But if
very Keynesian,
inflation is
correct?
a lagging thing,
Right.
then as an elected official, you have an incentive to ask for the lower interest rates quick.
Right. So it's a combination of the Keynesian model, which means the government has to grease the engine and get the wheels spinning, that it's a top-down model. And also to your point, it's the classic kick the can down the road. Like if
Yep.
you're, right now it's President Trump. To your point, it could be any president and has been several presidents that I only have to worry about what happens in the next 4 years if I'm the president.
Yep.
So if I can push inflation down 4 years by pressuring the Fed to lower interest rates to juice the economy, I look good. My opponent looks bad down the road.
Yep.
That's okay politically.
Yep.
So Mike, given that, does it make sense that people like someone like a Milton Friedman always said, we should just have a computer and a spreadsheet decide these rates, right? Like make everything rules-based, really, really minimize the need for human intervention. You just collect data, you feed it into a computer or a spreadsheet, and out comes the answer. This is what interest rates should be for the next X number of months.
Yeah. Well, first of all, anything that starts out with Milton Friedman said is almost definitionally correct.
Except for the withholding tax. That was the only.
Well, we'll get to that later. That's a completely different episode.
You're right.
He had a lot of very creative ideas that are just hard to implement in reality. Right. And I think that this is one of them. I agree. And believe me, if you grew up the way I did, in very conservative economics programs and was launched into it by Rose and Milton Friedman's Free to Choose, a great book I would recommend to anyone who's not yet an economist. If you ever disagree with Friedman, you really need to rethink yourself. But having said that, Friedman is absolutely correct that ultimately the object of the game is to replace people with a rules-based system. And I have been an advocate for this for many, many years.
Right.
The trick is, what are those rules and how do you implement it? Friedman always said, and I believe he is absolutely correct, that what you want is not a rule that controls the interest rates themselves, not a rule that controls the rate of inflation itself, but what you want is a rule that controls how much money is in the economy. And the reason that you want that is so that you would see some price changes from time to time, which are important signals
Correct.
to investors and consumers as well, the extent to which the economy is tightening or loosening. Those are important signals, and you don't want to erase those completely. But what you want is for them to reflect reality rather than to reflect, I don't want to say whims, but changes in Fed policy. One of the things that we don't like about having humans in charge is not just the political bias toward too much inflation, but the bias toward swings, big changes that make it difficult for investors and consumers to interpret what's actually going on in the economy.
Right, because we want price changes. Excuse me, that's natural in an economy. The thing is to get them unfiltered, to your point, because they're actually signals of what's happening. And when the Fed or Washington intervenes, we don't know if those price changes, either down or up, are reflective of the economy or reflective of a political directive, right? So I think that's what makes sense. Okay.
Yep.
Thank you. All right, so let's move on now. So we've kind of set the groundwork of what the Fed is, what it does, what it should be doing, and perhaps its ideal state based on a rules-based thing. But in the reality we have, President Trump has been for months now, ever since he took office for his second term, been on the current Fed chair, Jerome Powell's case. Some people, a lot of people, including Majority Leader Thune in the Senate, have flat out accused the president of conjuring up a prosecution of Jerome Powell, an investigation of Jerome Powell, because Jerome Powell refused to lower interest rates to the president's liking when the president demanded it. There's that political intrigue. And the other one is Powell's term as governor, as the chairman, ends in May of this year. So he's only got like 2 months to go, 3 months to go. So that sets the stage for who's going to take Powell's place. And the president nominated Kevin Warsh to replace him as chair. So, Mike, now you get to talk about those two things, perhaps one answer, perhaps two separate answers, but talk about the drama involving President Trump, Chairman Powell, and now his nominated replacement for chair, Kevin Warsh.
Well, Kevin Warsh is a great choice. Let's talk about that second. I would go so far as to say an unexpectedly great choice. I would go so far as to say I was shocked that the Trump administration came up with Kevin Warsh. It's just a great, great idea for a host of reasons. Let's get to that in a moment. First of all, to dispense with your flagging of the Jerome Powell drama, it's not just a matter of some have said. It is absolutely true that these charges were developed for political reasons to pressure Jerome Powell, or at the very least to punish Jerome Powell and send a signal to everybody else to fall in line with President Trump's desires or risk getting prosecuted. And I say that for multiple reasons. One is that the charges are silly. They're just absolutely flat out dopey.
And for folks, those charges basically are fraud related to the upgrade of the Fed building in Washington.
Yeah, reporting data on the construction, how much it's costing the renovation of the Federal Reserve's buildings. There's absolutely no there there. The cost was adjusted over time. It was fully reported. And it's just the fact that the cost went up over time relative to what it had been expected is just a fig leaf for what is an obviously politically motivated prosecution. The other reason we know this is because this is how the White House operates. The White House gets upset with someone, and the DOJ looks for a reason to prosecute them. I'm not saying anything that everybody doesn't already know. We're not breaking new ground here, right? It's just it's a bad way to do business, and it's a bad way to do business with the Fed ×2, because this isn't a political organization. It's an organization that depends on, for its effectiveness, on its independence from political processes. Prosecuting people that you're mad at would be a bad idea, even if it were some, dopey politician.
Right.
But doing it to an agency that's supposed to be politically independent is just outright stupid and bad for America. I don't know how else to put it. It's just a really grotesque and bad idea that undermines the Fed's effectiveness and thereby undermines our economy, because it creates this bias. It attempts to create the bias toward lower interest rates and greater inflation, neither one of which do we need, right? Now, Powell, his term as chairman ends in May or June. It ends in a few months. But his term as a run-of-the-mill Fed governor doesn't end for another 2 years.
Right. And that's a little, just to straighten it out, because as we were looking over our notes, I was a little surprised to learn this. So the analogy I made, Mike, to my simple brain, it's as if you had taken Roberts and said, okay, he's not Chief Justice anymore, but he's still a member of the Supreme Court. He's still a Supreme Court Justice. So
that's
Powell,
exactly right.
He just gets rotated out of the commissioner spot if you're a sports fan. So he's still on the board, but he's just not running the board, correct?
That's exactly right. And so he needs to decide, and he has not yet announced, but he needs to decide come the end of his chairmanship, will he just quit or will he hang on for another 2 years? And by the way, it's a coincidence that it's only 2 years. One could well imagine him having 4, 6, 8, 10, 12 years left, and that would really make this a funky story. But in 2 years, he has to go one way or another. And so this brings up an important question. If Jerome Powell decides, no, I'm not going, right? I'm going to hang on for the 2 years. That means there is no open seat. There is no room for Kevin Warsh that the Trump administration wants to see as the new chairman, except for the seat that ended January 31st, 2026, which is presently occupied by Governor Miron. Miron was appointed by Trump to finish out the seat some months ago, to finish out with just a few months to go, a 14-year term that was vacated when somebody quit, right? So Miron is in there, and he's overstayed his welcome, but the welcome, you're allowed to overstay your welcome until the president appoints someone new. So Miron is sort of on the bubble, as we say at the Indianapolis 500. He's on the bubble waiting to be bumped off, and he will stay there, and Trump can give him a 14-year term. He can stay there for a long, long time. If Powell quits, Warsh takes Powell's place, Miron stays there. That's one way that this could play out. And the other way that this could play out is that Powell says, I ain't going. Trump says to Miron, you're out. He puts Kevin Warsh in Miron's spot, gives Kevin a new 14-year term, and gives him the 6-year chairmanship. Now, a couple of things are worth exploring at that point.
I love to explore them, Mike. They're so soap opera-ish. I love it.
I don't know if they're quite worthy of a soap opera, but they're not unimportant to the American economy, that's for sure.
Right.
Bearing in mind that even if Powell hangs on, he's out in 2 years. So Trump can appoint whomever he wants 2 years from now, including putting Miron back in, right? But we don't know what President Trump's presidency is going to look like in 2 years. His political power may be every bit as strong as it is now, or it could be diminished. meaning
and I'm sorry to interrupt you because I think this is not unimportant given what you said about 2 years from now, which is these nominated governors, if President Trump puts them up, have to be confirmed by the Senate.
yep,
So in 2 years, obviously after the midterms have been decided, it could be the case
yep.
that the Democrats have made such significant gains that they pull a Merrick Garland and say, okay, we're going to sit on any nomination until we get a Democratic president, right? Theoretically. So you're absolutely right about the political landscape. Who knows what it'll be like 2 years from now?
And the Merrick Garland thing is not a bad analogy in the sense that 2 years henceforth would put us into the last year of the Trump presidency. One could well imagine sitting on the Senate confirmation hearings, not having Senate confirmation hearings for the last year, and denying Trump his ability to appoint someone. That would mean that the Democrats would have to take over the Senate, not just the House of Representatives,
Right.
not the House of Representatives at all, but would have to take over the Senate. And it's not at all clear that they're going to be able to do that, but we can't predict the future. So back to the individuals involved.
Sure.
Mirren is someone who Trump wanted in there because everyone recognized, Mirren himself included, recognized that Mirren would do Trump's bidding.
Yes.
Mirren has since, voted for lower interest rates, removing all doubt, right? In case anyone was wondering, would Mirren actually, once sitting as a Fed governor, vote for lower rates? The answer is yes. He absolutely has done that. Pardon me. And has done so in the face of overwhelming opposition. In other words, a couple of times he was one of only, I want to say 2 or at the most 3 votes for lowering interest rates when the rest of the 12-person Federal Open Market Committee were all voting to keep rates stable. So we know that he's perfectly willing to do Trump's bidding even when it's unpopular. And this is a real issue because it undermines the Fed's credibility as an independent source of price stability.
Right.
The whole world is watching, not just a bunch of wealthy investors in the United States, not just the stock market, not just the bond market, but to your point earlier, the entire world is watching. Will the Fed stand up against allowing more inflation, or will the Fed just roll over and continue lowering interest rates, pumping more money into the economy, causing more inflation, making Donald Trump and lots of other politicians happy
and wealthy? Let's face
and wealthy.
it. Yeah, let's
And
face it.
stick the American public with the inflation later on down the road. So we're obviously hoping, personally, I'm hoping that Mirren is removed. I'm hoping that Powell stays on, that forces the Trump administration to get rid of Mirren to replace him with Kevin Warsh. And we need to talk about Kevin Warsh.
Right. And and I want to talk about Kevin Warsh, but just to, again, I feel like I'm the voice of the layperson here because some people might be saying, what's wrong with lowering interest rates? Every time the president lowers interest rates, the stock market goes up. Isn't that a wonderful thing? Isn't that how we get our wins? But part of the problem here, as I understand it, Mike, feel free to correct me, is that's how you get bubbles. That's how you get crashes. That's how you get resets. Because if again, the stock market is not just interest rate dependent, it's influenced by it. But when it gets too high, as many people would argue it is right now, because earnings and things, business fundamentals are being obscured by lower interest rates, artificially low interest rates. What happens is you get the crash of 87, 2008, 2020, right? It may be a matter of severity, but again, prices acting as signals are being distorted by, again, we use quotes, artificially lower rates than other market forces may have had them, correct?
That is exactly right. And that's how the system works. And this is in part why the Fed used to be much more secretive about what it will do in the future, because it always wanted its decisions to be surprises, because it was always looking for ways to trick the markets into doing what it wanted markets to do, knowing that markets would only figure out the impact of policy months or even a year down the road.
And final question before we move on to Mr. Warsh. Are you at all uncomfortable with the fact that the Fed, I know the answer, I'm just tossing you a softball, that the Fed is really not a democratic institution? In other words, it doesn't respond to the people's votes. It doesn't respond to the people's whims. And you and I are sitting here arguing for less political involvement, less responsiveness to the people, less responsiveness to any mandate that a president may have. How do you address that sort of contradiction?
It's tough. I see it as working along a spectrum of independence. On the one hand, imagine a spectrum that goes all the way from over here being the Fed's going to do whatever the president wants. And this is how a lot of countries work. Central banks all over the rest of the world, in many cases, do whatever their elected officials want. That's where inflation comes from.
Right.
That's where huge amounts of inflation, right, come from.
Because no leader is going to vote for austerity, right? No leader is going to get up there and say, elect me and we'll suffer, right? Nobody's going to say that.
And to your point, this is what drives libertarians crazy, is this idea that a government would decide to spend as much money as it wants in order to stay in power, will lack the courage to raise taxes or the ability to enforce taxes in many developing countries, especially, and under institutionalized economies around the world, and instead say to the central bank, well, why don't you guys just buy all of our debt, issue money against it, right? Sure, we'll get some inflation, but we probably won't get that much, and I'll get my government financed without having to raise taxes. It's a great way to do business. Well, of course, the inflation is always ginormous compared to what people expected it to be. And the most damaging thing about inflation is not just that it's high, but it's unpredictable. In other words, if you knew that inflation was going to be high, but it was, always going to be 6%, always rock solid 6%, month after month, quarter after quarter, year after year, always 6, 6.0, 6.0, 6.0, you could deal with that. You would hate it. It would be bad for us, but you would learn to deal with it, right? The problem with high inflation is that sometimes it's 3, sometimes it's 9, sometimes it's 3, sometimes it's 9. And that's how you get 6% inflation. And it sucks. And it's bad for you because, to your point, you can't read the signal. So we don't want this idea of the Fed being completely politicized, or even a little. And at the other end of the spectrum, way over here, if this is politicization, all the way over here is Milton Friedman's computer.
Right.
You can't influence it. You can't be mean to it. You can't threaten it. You can't prosecute it. Right. You can't make tweets that hurt its feelings. It just does whatever it's going to do. I'm not suggesting that the President of the United States would do any of those things, but the computer, you cannot influence it. Okay. Now, the problem is that it's hard. Controlling the amount of money in the economy is not as easy as it might sound, because the demand for money changes quite rapidly as we go through different parts of the cycle. It doesn't just change over, 1 year, 1 decade to the next. The demand for money can change quite rapidly, and so you could get some volatility. So there are some problems. I don't want to make this sound so simple, like what kind of idiot wouldn't choose this? It's hard.
Not the least of which is collecting the right amount of data, making sure the data has integrity, making sure that you feed it in dispassionately, and that's no easy task. It
Even
really
if the
isn't.
whole world, to your point, even if the whole world were committed to this idea, someone hears our podcast and they say, John and Mike and Milton Friedman, and by the way, a whole lot of other people. It's not like,
Right.
it's
Right.
just us and Milton Friedman. A whole lot of other people are right. We need to replace the Fed's Federal Open Market Committee and the Fed board and its discretionary monetary policy with a laptop, even if everyone agreed to that. And we're years away from that. But even the moment you agree, you've still got several years of work to do to get everyone to agree what the algorithm is going to be, what the computer is going to be, what the data is going to be, who's in charge, what happens if, what happens if, what happens if, what happens if. Because let's not kid ourselves, you and I know how bad AI is, right? Last week, we put notes together using AI about a couple of topics that you and I were going to discuss, and it gave us a lot of data from like 3 years ago. I went into AI a few weeks ago to ask a question about the Pope. They told me that, the previous guy was still, they didn't even know the Pope had passed away, and it's been like, 2 years at this point.
Right.
So, let's be careful about how much power we turn over to a computer.
Right. Absolutely. Yeah.
So in the middle is this idea of just having non-political, perhaps not even politically appointed people, right? Just have bureaucrats in charge. Well, there's a couple of problems. Bureaucrats are typically on one side of the political spectrum. We've grown comfortable with the probabilistic nature of bureaucrats being biased toward liberalism. I don't mean classical liberalism, but they're,
it's a strong belief in government.
It's a strong belief in government. That's well put. A strong faith in government, and so you might get a bias toward bureaucrats' willingness to finance government expenditures and give us more inflation than we otherwise would. We're afraid of that bias.
Right.
We're also afraid that without them being politically accountable, it means they're not really accountable to anybody. What happens if they get it wrong? What are you going to do about it? That's a problem. At least we have impeachment processes and appointment processes and terms that end, right?
Right.
The problem you have is that there's really no such thing as completely apolitical appointments. As the Kennedy Center is learning, at some point, even boards that you thought were apolitical, right?
Certainly, President Trump has challenged any
previous notions might be independent
or career bureaucrats. To your point, yes.
Yeah, what happens when? Well, you had brought up in your in our previous discussion, you had brought up the Bureau of Labor Statistics example.
Oh my goodness, yeah.
Where the BLS is an agency that is almost completely controlled by bureaucrats.
Not just bureaucrats, nerd bureaucrats.
Nerds!
I mean,
completely power nerds.
Like if you pictured the typical movie nerd with horn-rimmed glasses and pocket protectors and slide rules, that was the BLS, Mike. It was just a whole room full of those people.
Absolutely. Short sleeve white shirts and ties that didn't make it to our belts.
Right.
When I worked for the Office of Management and Budget in the new executive office building across the street from the White House, we had the cheapest digs in America. And I think that a lot of people would think that we had offices that were even too good for us. So bad did we look. The nerdliness, I don't think most Americans can appreciate the nerdliness that was at hand in these agencies. These are people that don't have a political bone in their body.
That's what I was trying to get at. You would assume that these people were more worried about the new Intel CPU chip being able to do 5 more transactions per second than anything else.
These are people who live and die over the decisions about which bread to include in the survey data, right?
Yes. And to your point, this was targeted by President Trump right off the bat. This was done roughly a year ago. It was around March of 2025.
Yep.
Fresh into his new administration. He did not appreciate the CPI numbers and the unemployment numbers.
It was showing
So-
that there was more inflation than he liked.
Right. Therefore, he decided the problem was that the Bureau of Labor Statistics was a Biden sort of, I
Yep.
don't know what he thought, but he thought they were all Biden appointees, and he needed to get rid of them and replace them with folks who thought Trump was
Right.
their president, right? So, so
And you can't imagine another organization more difficult to influence politically. It doesn't matter who the head of the agency is.
right.
Because there's just 1,000 nerds running around with tiny little pieces of there is no such thing as a person who controls the data, controls
There's no super
the
nerd.
survey.
There's no
There's what?
super nerd.
There's no super nerd. Everyone is, this flattened thousands of, each one has a little tiny piece, and you're adding it all up. But
So it's a libertarian's dream. It's all decentralized in there.
it's completely short from criminal fraud, which
Right.
any of the nerds would immediately spot
Right.
and out. There is absolutely no way to impose bias on the system, so it's completely silly. So anyway, do we want a system like that for the Fed? I think for a lot of folks, the answer is yes. The Fed is, as I mentioned earlier, full of nerds who are very patriotic, very hardworking. Is there a bias toward inflation in there? There might be. So you need to be careful about that. But you certainly don't want these people to be politically influenced. And if you have people who are going to be politically appointed by someone, even if they're appointed by a board, well, the members of that board have to be politically appointed. Well, what if you said they were independent and they were named by some board? Well, the members of that board have to be appointed. There's no way to zero out political influence. So you're just hoping that you get people like on the Supreme Court.
Mm-hmm.
There are people who are appointed by politicians, and then after they're appointed, you hope they're going to be completely apolitical. And I think that we recognize that that's asking for a lot, because even if they believe they're being apolitical, even if they want to be apolitical, they are who they are. Right. And that is why they were appointed by the politicians who chose them in the first place.
That's a great point. And to that extent, I think you're right. But I also want to keep as we progress and finish off this conversation, because I do want to get to the nominee of President Trump's nominee. It's very important to keep the BLS in mind, because I think if we touch on how inflation and the outlook for inflation and unemployment, let's keep in mind that BLS was almost completely turned over a year ago. And there is some question as to whether a lot of what we're seeing is legit or not. But let's save that. Let's talk about Kevin Warsh right now. Earlier, he's President Trump's nominee to become the new chair. Earlier, you said the best pick you could have hoped for. You were better. You were
better than what I was hoping for.
You were extremely happy and with this pick, and talking to you, you were like, couldn't have gone better. Tell us why.
Well, there is one drawback. He's an attorney, not an economist. Okay. That's a problem that I think only attorneys and economists might appreciate.
Okay.
So let's set that aside just for a moment. He seems to have a grip on the issues as though he were an economist. He seems to understand that what's really at stake is the perception of the Federal Reserve Board's independence from the political process. Right. He has been what we call an inflation hawk in the past, which is to say he hates inflation. Good. He doesn't vote for lower interest rates unless he absolutely feels like he has to. So just from the standpoint of his policy center of gravity, he is where we want him to be. The other thing that's great about Kevin Warsh is that he has openly talked about how the Fed needs to be independent of politicians. I was shocked that the Trump administration, that makes no bones about their interest in appointing someone that they can control or at least count on, right, would pick Kevin Warsh. It doesn't make it. It almost doesn't make any sense.
Okay, let me jump in here, Mike, because I had the exact same thought. Do you think it's because President Trump was sold Warsh by someone else, perhaps
Yes.
Scott Bessent, or
Yes.
I'm not sure?
Yes.
Okay, go ahead, talk about that.
Yes. And the alternative, a lot of people believed, was likely to be Kevin Hassett, who is a Trump advisor who already works for the White House. The idea was floated that Hassett would become a member of the Federal Reserve Board and not even give up his advisory role to the White House, which would make explicit the absence of independence from the political apparatus and from the White House per se itself, which would have been a horrific decision,
right?
But the one that we were all, for which we were girding our loins, right? We were ready for this horrible decision.
Right.
And I don't think there's any question that Scott Bessent, of whom we have been very critical for cause, because he has dropped the tariff ball and he has dropped the budget ball, he has dropped the interest rate ball, the credit rating of the federal government of the United States ball. He's dropped a lot of balls. So he's earned a lot of criticism for us, but there's no question that he did the right thing here, that he was on the side of Fed independence. He made this argument. Whether he's the one that closed the deal with the president, I don't know. But someone did, and Bessent was on the right side of the argument. We believe that the White House, that President Trump himself was sold on, and by the way, I'm so used to saying the White House when I mean the president, because it's an apparatus, not just an individual. And we know now that it's largely wrong in the case of President Trump. He's the one that makes these decisions and wants everyone to fall in line, right?
Right.
Go find a reason for me to make this decision I'm going to make anyway.
Absolutely.
So he was sold on the idea of Kevin Warsh. He was sold on the idea that it should be someone who will demonstrate independence because markets would like that. We know that President Trump is a little bit sensitive to what the stock market does and what interest rate markets do, which is fascinating because he puts up with so much political pushback, right? He will do things that he wants to do, notwithstanding the pushback he gets, especially from the left, but sometimes from his own party. The Epstein files are an example. I mean, say what you will about the president. We criticize him all the time. He has enormous political guts, right?
Oh, sure.
Sometimes his instincts suck, but he's
not afraid to do what he wants to do. That's for sure.
He's not afraid to do what he wants to do. And so often it makes our heads explode, but you got to hand it to him. One of the few things that he listens to is the stock market and which way interest rates are going. And I think that he was sold on the idea that markets would not like Kevin Hassett and that they would like Kevin Warsh. And they were correct about this. And Trump did the right thing. And one of the things that I find really interesting is that Warsh has gone so far as to say, maybe we need to rethink some of the ways that the Fed does business. And I really don't know whether the conversation in the White House was, let's, rally around Kevin, notwithstanding that he has a libertarian streak and wants to change the way things are done, because he has a libertarian streak and wants to change the way that things are done, or because these arguments are just too sophisticated the White House doesn't understand, which could well be the case.
Right. And I know sometimes, at least I won't speak for you, for myself, it becomes almost a de facto launching position to say President Trump doesn't understand what's going on. Because he has it, like even in his best days, when he tries to explain some of this stuff, when he wanders off the script, it's calamitous for him. For anybody who understands what he's talking about, it's calamitous when he tries to explain tariffs, when he tries to explain anything, right?
Right.
Um,
He tries multiple and competing arguments, and it gets all jumbled up.
right. And you and I have said a lot of times someone should just take his phone away. He shouldn't be allowed to go on Truth Social. He shouldn't,
Yep.
this and that. Do you think that it's possible that when Warsh says he wants to shake things up, it's not necessarily in the way you and I would hope he would shake things up? Like, is it possible that his quote shaking up could be, I think the Fed should be more responsive to the president?
No, I think it's less. I think Warsh is on the right side of these arguments. He has talked about shrinking the Fed balance sheet, which I would love to see. One of the reasons the Fed has so much influence over financial institutions is because it is simultaneously their regulator, their interest rate setter, and their lender of last resort, meaning, if you get pushed up against a wall, never mind a full bailout. Let's set that aside just for a minute.
Right.
But let's say you're just shy of needing a bailout, which you really need is a loan. Some people will call that a bailout, but you need a loan that no one else will give you.
Mm.
The Fed is there for you.
Hey, you run up to the Fed window, right? It's just
absolutely. And one of the reasons the Fed is able to do these midnight deals, either by restructuring financial institutions, by acquiring their debt, making loans, forcing restructuring, forcing one institution to take over another. One of the reasons the Fed is able to do this is because their balance sheet is ginormous. Trillions and trillions. It's been as much as $8 or $9 trillion, and it's been coming down lately, but it's still ginormous. And Warsh has been explicitly critical of that. And one of the reasons he's been critical of that is because he believes it screws up monetary policy, but and makes it too loose and hard to control. Good for him, talking like an economist. But the other reason is because he doesn't like Fed intervention in cutting these deals and has too much latitude. Now you're talking libertarian stuff, right?
right.
So even if, as a lot of folks say, Kevin will not be able to easily shrink the Fed's balance sheet. It's harder than he thinks, which is true. It is. It's very hard to unwind a lot of these contracts. But the fact that that's where his center of gravity is, that this is the sort of thing that he wants, means that he will be the guy who says, no, we're not going to bail out institutions just because they've been idiots and we're large and we can do this easily. That's not a good enough reason. And this is arguably when you'd rather have an attorney than an economist. I can't believe I said that. When you want someone as Fed chair who says to a very large financial institution, when it comes to you and says we need a bailout, we need an attorney to say, gee, that sucks for you.
Right.
But that's not my problem. You're going to have to tell your bondholders that they're going to have to take 63 cents on the dollar, and you're going to have to tell your equity holders that they're going to take 0 cents on the dollar. You're going to have to fire your board of directors. You, Mr. or Madam CEO, are going to have to resign. And then we will step in and help your organization find a buyer who's going to treat you very badly, but will at least protect the American public. That's what you need in that position. And I doubt President Trump has all that in mind.
And it's interesting because what you just described reminds me of a lot of what happened during the financial crisis in 2008, 2009. Who was it? Greenspan.
Warsh was on the governor. What was it? Governor on the board.
There you go. Because it was during that time, and I'll mention another name, Jamie Dimon, widely regarded as the best CEO in America. Maybe not by President Trump, since they've been clashing since their days growing up in Queens, I think. They were neighbors. People don't know that. But the Dimons and the Trumps, their parents were neighbors in Forest Hills, I think. And they've been kind of feuding ever since then. But anyway, Jamie Dimon, he's the president CEO of JP Morgan Chase, the largest bank in the US, he in Davos really underscored warning about destroying Fed independence.
Yep.
That in doing so, you would lift inflation expectations. You would push rates higher. His reaction and the reaction of, in general, from what I could tell, of CEOs across America to the news of Warsh being nominated was surprisingly neutral / slightly negative, perhaps.
Yeah.
I think you've already answered it, but explain to me, why would America's business leaders, if we use that term, be very cautious about Warsh's nomination?
Because number one, because President Trump shot his mouth off and said that he wants someone that'll lower interest rates.
Okay, so the first one is bad PR.
Bad PR. Well, bad PR from the guy who matters, the President of the United States, right?
Absolutely. Right.
I mean, this goes with President Biden choosing Kamala Harris as his VP nominee after saying, I want a black female.
Right.
Right? It's okay to want a black female. I get the reasons. But could you have done the poor woman a favor and not said, I'm choosing her because of that, right? Making everyone's head explode about, well, she wasn't the best pick. She's just the best pick in that category. If he had said to everyone internal to his circle, I want a black female.
Right. Go find me one.
Go find me one, right? The best I can get. And then when you announce it, you get to say she's terrific. And someone says, well, did you choose her because she's a female? No. Well, did you choose her because she's a minority racially? No. But you blew it, right? So now people say, well, did you choose Kevin because he said he wouldn't raise interest rates? Trump says, yeah.
Right.
Did you not get through your course in macroeconomics your sophomore year of college?
Right.
It just undermines all of Kevin's credibility. And the word is that Kevin did say, when asked, he should not have answered the question. He did say he would not raise interest rates right now. Well, no one is talking about that, right? No one is saying that they would. The big issue is, do you lower them or do you keep them the same? I mean, sure, Mike Tremont would like to see rates stabilize and come up a little bit, but then mainstream conversation is, do you hold them the same or do you lower interest rates? So it was an easy thing for Kevin to answer, but he shouldn't have answered it. And the White House immediately seized upon that. Kevin's our guy because he sees that our way, he wants lower interest rates. And this is why, after talking to Kevin for months and months and months, they finally appoint him, and it makes it look like they have co-opted him. And this is why we need to follow. You're the one that brought up earlier the Supreme Court analogy, which is a good one. The Ruth Bader Ginsburg rule, which is when you are in your Senate confirmation, you do not answer questions about how you would rule.
Right.
And Kevin blew it by saying he wouldn't raise interest rates. But economists say this all the time. Economists are always asked, what would you do with interest rates, right? So he says, I wouldn't raise them right now. And there we have it. So when he was finally appointed, a lot of people thought, well, he's been co-opted. I don't think he has. I think he's a marvelous choice. And I think that the White House is getting a much better choice than they bargained for.
Right. That's great, because look, I think we're on the precipice of a recession, in my opinion. I don't think that the numbers we're seeing, if I'm being cynical, John, and conspiratorial, Big John, I don't think the numbers we're getting are accurate. We talked about the BLS being turned over, Mike. I think what we're seeing just doesn't make sense if you're an economist, if you're just a consumer going to the supermarket every day and paying your rent or paying your mortgage. We do not align with what the White House is telling us, that everything's great, inflation is under control, it's going down, things are awesome. Just some numbers, I looked them up. Real GDP growth is slowing down. It's around 2.2% right now. PCE inflation is about 2.7, and it's maybe trending down a little bit around 2030. Unemployment is roughly 4.6%. Things are contradictory to what the White House is telling us, which is not, to be fair, every White House is going to paint a rosy picture, right? And I think, to your point, having a Fed chief, a Fed chair that is willing to dig a little deeper, look beyond the publicity, is what we need right now. And I'm sharing your initial enthusiasm over Mr. Warsh. I hope you're absolutely correct about him, that he does have the discipline and he does have the moral fortitude to say, I'll go where the data takes me, Mr. President, and hopefully that'll work out the way you want. All right, Mike, I think we're in pretty good shape for this episode. Is there something, I'll give you the last word. What do you want to say to our viewers?
We're on a knife's edge regarding a recession. It's interesting that you said that you anticipate one. Of course, we always do. A couple of thoughts on that. One is, remember that recessions are things that you don't slide into gradually. You fall off of a cliff. You see growth is kind of uneven, but it's going up, and then bing, you have a recession. And then, a year later, you're growing, and then a few years, and beep, and you're into a recession. That's how it works. So when you worry about a recession coming, you're worrying about something happening. Growth comes from a gazillion little tiny things going right. Recessions come from something going wrong. And there are things that could go wrong, right? People lose confidence because of rates, because a bad investment environment. It could be that all this money that's going into AI, suddenly we discover there's a bubble there. The stock market goes the wrong way. There's always a war around the corner. There's all kinds of things that can happen, right? And they do happen. We do have recessions.
Right.
The other thing to keep in mind is that one of the big ways that we predict recessions, the best predictor of a recession, it's almost unbeatable, almost undefeated, and that's the extent to which interest rates are higher short-term than they are long-term, right? What we call an inverted yield curve.
Inverted yield curve.
And we had an inverted yield curve a year and a half ago. I'm trying to remember where we are today and where we were then, but about a year and a half ago, we had an inverted yield curve that straightened itself out about a year ago, which is to say interest rates for borrowing at a few months were actually higher than interest rates if you were borrowing them for 10 years. The big comparison is between the 2-year Treasury note and the 10-year Treasury bond. Okay, well, we straightened that out. The data suggests that you're most vulnerable for a recession 15, 18, 21, 24 months after an inverted yield curve. So we're coming into a period where we should be most nervous about it. To Big John's point, to your concern about coming into a recession, this is a time when we should be concerned. And I think that the trigger that we should be worried about, the two triggers are potential conflict, right? If we get into something with Iran that looks more expensive than what we bargained for.
Or in Latin America.
Or given the American government's bias toward interventionism anywhere, right? The third category of everywhere else. Or an AI-related bubble burst.
Yeah. That one I think is fairly obvious. If you're old enough to witness the .com bubble, it's right along the same path.
I think we're all anticipating a bubble burst. We're just hoping it's not too big that it's more of a balloon deflating than popping.
There you go. There you have it, folks. Move into cash as soon as you can. Anyway, not to be construed as financial advice. All right. You've been watching Liberty Lens. I'm your host, Big John, along with my friend and co-host, Mr. Mike Termat. Please hit the like button, subscribe, leave us a comment. We read all the comments. We're more than happy to discuss with you when you leave a comment. Just no 4-letter words if you don't mind. Until next week, we'll catch you again right here on Liberty Lens. Peace, everyone.